The SEC versus Ripple lawsuit will be the focus of everyone's attention on the eve of the opening brief filing deadline that the SEC has set for January 15th. Notably, the Securities and Exchange Commission has not said whether it will continue with the appeal or withdraw it. This choice could be complicated by the fact that Chair Gary Gensler is expected to leave his position shortly. Even though the presence of uncertainty makes XRP vulnerable to the possibility of increased volatility, the anticipation of a change in the SEC monitoring of digital assets continues to be a tailwind. There are going to be significant leadership shifts in the SEC very soon. Jaime Lizarraga, a Democrat working for the Securities and Exchange Commission, will resign from his position on January 17th, and Chair Gensler will step down on January 20th. For the Trump administration to be able to nominate replacements for Commissioners Lizarraga and Caroline Crenshaw, former SEC Commissioner Paul Atkins will be appointed to the position of Chair of the Securities and Exchange Commission. It would benefit the cryptocurrency market if the Securities and Exchange Commission, SEC, focused on working with Congress to develop a framework for digital assets that encourages innovation while safeguarding investors. According to statements made by Ripple Chief Technology Officer David Schwartz on Monday, January 13th, he brought attention to the deficiencies of the SEC's enforcement. Therefore, the haphazard enforcement strategy of the Securities and Exchange Commission, SEC, which targets firms attempting to comply with the law, does not provide potential defendants with the notice required by due process. This is especially true because the field is relatively new. The regulatory body has not provided any significant guidance regarding the crypto assets that it considers to be securities. The report only provides advice on the most transparent crypto assets, which are tokens that are designed to look exactly like stocks. What about utility tokens, stablecoins, or even Bitcoin and Ether? What are your thoughts on these? The SEC stubbornly refuses to acknowledge that the rules that are now in place do not accommodate blockchain technology. Uncertainty is created when there is official silence and contradictory messages from inside the organization. The only thing that cryptocurrency issuers and exchanges can do is keep their fingers crossed and trust that the government does not find them guilty. As Chair Gensler's term comes to an end, the Securities and Exchange Commission, SEC, is facing judicial fallout. An unfavorable outcome occurred in the case of the Securities and Exchange Commission, SEC, versus Coinbase, Coin, as the Third Circuit Court ruled in favor of Coinbase. Following the announcement of the decision, Coinbase Chief Legal Officer Paul Grewal stated, "We have just successfully obtained a writ of mandamus from the Third Circuit Court of Appeals. SEC's order was conclusory and insufficiently reasoned, and therefore arbitrary and capricious. We grant Coinbase's petition in part and remand to the SEC for a more complete explanation," the court said, rebuking the SEC for its order that denied our rulemaking petition. The court had determined that the SEC's order was arbitrary and capricious. In his conclusion, Judge Bibas, the Securities and Exchange Commission, SEC, should not deliver yet another inadequate explanation in an already lengthy list of them. We have the right to remand it to explain itself. On the other hand, imposing laws that are not appropriate against cryptocurrency companies that are attempting to comply with the law goes far beyond the scope of the battle against fraud. It is aimed at a whole industry and runs the risk of being de facto banned. The SEC is required to address that issue while the case is on remand. There were portions from a court ruling that were shared by Ripple Chief Legal Officer Stuart Alderoty, who stated that Paul Grewal and Coinbase deserve a tremendous amount of congrats for their victory today. Gensler's anti-crypto crusade is imploding in his final days, and a federal appeals court has put bare what the industry has been saying for years. His selective enforcement of securities rules was a, not so, hidden attempt to prohibit the business entirely. This is something that the industry has been speaking about for years. It's a stain. A recent court verdict may put pressure on the Securities and Exchange Commission to reconsider its appeal in the Ripple case. An attorney for the amicus curiae, John E. Deaton, recently evaluated the potential benefits of an appeal to the SEC, noting, "Therefore, my point is that appealing the verdict about Ripple is a waste of time, and I believe that Paul Atkins will agree with me on this issue." A legal battle drives sentiment. It is the Ripple scenario that will determine the price trajectory of XRP. If the Securities and Exchange Commission, SEC, submits its opening brief and successfully challenges the programmatic sale of XRP ruling, the price of XRP might go below $2. In contrast, if the agency decides to withdraw its appeal, XRP may be able to surpass its record high of $3.5 that it reached in 2018. SEC deadline is approaching, whales move 76 million, and XRP price aims to break out to new ATH. Significant whale activity and the rapidly approaching January 15th deadline for the U.S. Securities and Exchange Commission's SEC next legal filing have combined to indicate that XRP's price is poised for a bullish breakout. With a market valuation of $145 billion, XRP is currently trading at $2.53, up 1.28% over the past day, according to the most recent crypto price data. In the same time frame, trading volume increased by 76% to $10 billion, demonstrating a growing wave of institutional and speculative interest in the XRP cryptocurrency market. Market buzz is caused by whale movement, a movement of 30 million XRP tokens, or about $76 million, from the South Korean exchange Upbit to an unidentified wallet was reported by blockchain surveillance firm Whale Alert. Because whale behavior might indicate possible significant changes in cryptocurrency prediction and general market sentiment, traders and analysts frequently closely monitor such high-volume transactions. Big-scale transaction or accumulation. Large holders, sometimes known as whales, might be accumulating in anticipation of a potential price increase. Similar whale swings can also be a part of larger institutional or over-the-counter trades, although historically, they have occasionally preceded double-digit price rises. When predicting and analyzing the price of XRP, this behavior is crucial. Market focus on SEC versus Ripple. This deal was made at a time when interest in the SEC legal dispute with Ripple is growing. The cryptocurrency world is tense due to the regulator's January 15th deadline for an appeal-related filing, with many believing that a positive turn for Ripple could result in a substantial increase in the price of XRP. For investors monitoring the Ripple SEC developments, as well as Ripple XRP aficionados, this XRP SEC news is crucial. Can XRP maintain crucial support in the Ripple price prediction? Technical analysts are keeping a close eye on a crucial support level of $2.40, despite the increasing positive feeling. The following are the main situations predicted by cryptocurrency. Toward $4, a bullish breakout. XRP may continue to hold the possibility of a symmetrical triangle objective close to $4 if it can sustain support above $2.40.